Enthusiasm is the electricity of life. How do you get it? You act enthusiastic until you make it a habit. Gordon Parks. My friends, I'm excited as you hear me every day about the market because I find it fascinating. I guess there's days when I have to gin my enthusiasm up, but it's rare. And if I had to, I would. But I hope you are enthusiastic about how exciting the stock market is. It is so much fun. It's the reason I bring this to you each and every day for free. I try to do it no matter where I am in the world. Even when I'm on vacation, I'm bringing you this show. Only missed it a few times when I've literally been somewhere where there is no internet. I've been at sea or I've been sick, and I rarely get sick. So it's a pleasure to bring it to you each and every day. I hope you're spending the 10 to 15 minutes that we ask in order to obtain market mastery. And I tell all my students, do not worry about how long it takes. You will make up for all the time you ever spent. But if you put it off today, it's just going to be one more day until you have that victory of market mastery. And it's fun. So spend 10 to 15 minutes each and every day. You can't do it all on a Sunday. You've got to have that day in and day out practice so you learn the nuances. What's going on right now? We see stocks are down along with Bitcoin, and we see bonds and gold are about flat. Yes, technically they're up, but they're about flat. So not much going on in the upside in the market today, at least on our 5 ETFs. Let's first jump into the S&P 500. Now, if you look at this, it's Wednesday, right? And as we look at Wednesday, we can see that things down in the morning and the afternoon. But I started off looking, okay, we are over halfway through the week and we are maybe halfway toward average volume. No, not even halfway. So again, a weak week when it comes to volume. You can see it here on the half day as volume is weak. When you look at what's happening on the 2-day, the Tuesday, Wednesday 2-day candle has finished drawing. You can see for the last 6 days as we have had the volume weaken on the 2-day. Now we're sitting right there on and have been, for 8 days now, right there on the weekly trend line. And again, we see some weaknesses inherent in the market. You can see on the half day how it's been down, up a little, down, up some, down again. I'm waiting to see as we move along. Yes, we are still technically long on this market when it comes to the S&P 500, but there's some concerns as things are just not building. They are stalling. We do have a green up candle for the week, but weak volume so far, so we're paying attention. There may be a catalyst that blasts this market up again, or it may just be wearing out. Now, we're entering into the fall-winter trading zone where things tend to move in one direction or the other with decent volume for decent periods of time. After all this up movement during the course of the early spring and throughout the summer, as we go into the fall, could things continue on up further? Yes, but they could also drop over. So be aware. Be expecting something to happen. And I am guessing on the downside, but I could be wrong. Right now, we are still long, but keep all of that information in mind. Now, let's move on and take a look at the NASDAQ 100. The S&P was down 0.52%. The NASDAQ down almost 1% at 0.96%. See, it was down in the morning, further down in the afternoon. The wick piercing the weekly trend line at the end, in the afternoon candle. More volume in the NASDAQ 100, above average in the morning, just below average in the afternoon. We can see we're almost at average volume on the 2-day for the Tuesday, Wednesday, and we're about average. So again, a little below where we need to be to get up to average volume for the week. We have reached a higher high this week. You can see the high 612.80, 612.08 last week. We haven't reached a higher high, 613.18. In fact, I know we went over that yesterday. And We were higher back on that week. And again, that's why you need to look at the figures. That's why we make sure they are displayed up here. That's open, high, low, close. And of course, looking at where the high was, we did reach a little bit higher back on that week beginning the 6th. We also had volume to back that up. This week looks like the volume's weaker, so we will keep an eye on things as we continue to move along. Still some concerns, like with the S&P. We still have concerns about things moving down as we enter into the fall-winter trading zone. What do we see going on with bonds? Up 0.07%, just about flat, 2 days in a row. Not flat 2 days in a row. We are where we hit sometime in the morning, it looks like, on Tuesday as we finish up on Wednesday. So we're right there at about the same level, technically up just a little bit more, but again, flattening out. Decent volume at the end of the day. Not quite average volume on the 2-day, but stair steps of price moving up to a higher high. And the weekly candle, again, we've got to make up some volume on these last 2 days to keep that volume in the right place. But again, we are long on 20-year U.S. government bonds. What about gold after that pushback yesterday? Strong down movement, 6-something%. We are technically up 0.01% for the day. You can see where there was some down movement in the morning and then a little bit of recovery in the afternoon. These are Heiken Ashi candlesticks, so they're not your typical high open, low close. Look up Heiken Ashi, HEIKEN-ASHI. You'll find we have about maybe the most popular Heiken Ashi training on the internet. But if you put that in there, Charting Wealth, you will find it. I do encourage you to watch it, study it, so you understand what these average pace candlesticks are about. The reason we use them is they're not nearly as complicated as Japanese candlesticks, the traditional ones, and I think they're much more helpful. It takes out so much of the volatility that can be confusing, and that is the reason we use them. As we ended the day, we can see where price moved up some and just sitting right there on that weekly trend line on the half-day chart. 2-day chart, we of course had the wick push through. Candle itself is above the weekly trend line. And of course, as we look at the week, we can see that we did reach a higher high. That of course occurred on Monday before that big drop on Tuesday. So we're still in the green. We've got lots of volume here. And of course, so much of that volume was related to what happened on the Monday candle of the 2-day chart, the Friday, Monday, and the Tuesday, Wednesday candles with all of that volume. But we will continue to watch and see which way gold's going to go. That pullback shocked a bunch of people, and you do need to be careful there on long positions. What about HODL? Well, it has been and continues to be the only down move on our chart, the only bearish, and we are still bearish, a little more in a coin toss on HODL as we move into the second week of red down candle. We had those 2 days of strong up movement, and then today a pullback of 3.67%, again resorting to the mean, all things being equal. The trend is your friend until the end when it bends. Well, it's not bent yet. Bounced off the weekly trend line on that half-day chart and continued down. Red spinning top on the 2-day with all that volume. So we will be paying attention, but we still do have that press of downward momentum on HODL. Friends, that's where we are as we end the day on Wednesday. Going to Thursday, 2 more trading days left. God bless, my friends. All the best from the whole team at Charting Wealth.